Hey traders, welcome to this video. Just thought I'd run down on the euro yen since you've got a lot of yen movement across the board. I have just updated several posts regarding the yen for the euro yen, the pound yen, CAD yen, AUD yen, all those yen pairs. Like I said, as of, and if we flip to the daily for this, or maybe even better, the hourly, you can see around the early hours of this morning. Okay, so that is the 29th of February. If you're looking at it GMT time, you have this yen strength come in. Okay, now that's because you had lots of comments from BOJ, or the Bank of Japan's Takata, talking about avoiding discontinuity in monetary policy exit, and all kind of other comments. Okay, it's very much a mixed bag of what he was mentioning, but you can see obviously it has put up that yen strength. Okay, he said 5:14 a.m. I'm undecided on the monetary policy decision. Okay, and he's talking about in regards to ending negative interest rates in March or April. So he's thinking about it. Okay, and what you saw is Euro, CAD, dollar, all yens then start to drop, notably your Swiss franc yen as well. So what happened since? Well, you had a rebound, and the rebound came off from, let's have a little look. The rebound, you're probably going to have to refer to daily charts for this. Your rebound came off the earliest of minor support. So immediate rejection there. Okay, long side traders straight back into the market, and it's probably because he didn't say exactly that it was going to be an end to negative rates. He said he was thinking about it. Okay, so it's completely different. Now, the initial rush of yen strength, like I said, has been sacrificed with rebounds very early on. So what I would plan to do really, and my bias, most of you know, I've done many videos on yen pairs. I like the yen pairs short, in line with what he's saying, because he might not be saying now, but you can see he's teetering towards, hinting that they will do it. Just, it's a matter of when, not if. So I would consider any pushes up to key resistance like this. This is great because what you'll have is, if you get back over here, you'll have these lower highs forming and these lower lows. Okay, so if you drew something like a parallel channel, okay, markets naturally move in channels over all time frames. Okay, that's just how things work. You can see that if I stretch it out in line with lower lows, lower highs, you've got this very short-term downtrend forming on your 4 hour. Okay, a bit like you had there. Now, whether it takes you much lower, okay, or it just takes you like that one did, it doesn't matter too much, because you would probably be out by then. But you can see the short zone I mentioned comes in line with key resistance here within this newfound downtrend. Okay, so again, we're trading with the trend, we're upping our odds, and we can further up our odds by trading in price action areas. It's key to remember as well, if you're going to do this, that your size has got to be proportionate. I'm live on charts for the New York session with my mentor, co-founder at noon today, where we teach our academy members and go over all this kind of stuff. But there's a key idea of technical confluence there. Your stock oscillator probably will be somewhere in the middle, and I would say it will probably be much higher once you get in line with previous highs. But if you squidge your charts up, what you can see is, again, we're returning to this previous area we fell from. Okay, and if you zoom way out, you can see it happened there as well. So anything up here, really, anyway, is going to start to constitute a short side bias. And because of that early rejection there, and the fact that you don't really have a clear direction just yet, I mean, sort of where the Bank of Japan's going, but they're not telling you exactly how harshly or when. I would say any reshort on a 4 hour chart or a 1 hour chart, I would just be a bit careful on the size. Okay, you are getting early rejection now. Okay, so you could consider shorting it now. I would just do it very lightly. I think the odds really are more with you slightly higher up there. Okay, and I wouldn't be surprised if the market does just continue that rebound strength for the euro against the yen and other yen pairs and put you slightly higher. And then, of course, that leads into your key short zone. So short biased overall, not really considering long unless you can get a really big pullback. If you flick something like your weekly, you can really see how high you are. So if you're ever looking to buy this, you really want to come down something like that. And that will take you to your nearest key MAs. Whether these key MAs will hold is another story, because you've now got the idea of yen rates or Bank of Japan rates going up. So if the Bank of Japan starts to put its rates up, you should see a trajectory like this as investors, foreign investors, head to the yen to invest because they're going to get a higher return. At the moment, they're not, which is why you've seen extreme weakness and how you could have planned for it. Anyone who's talking about shorting this as it went all the way up, you would have known the sentiment was against you if you study and understand basic market economics, which again we teach every single day in detail on charts. So as the market falls, it's likely you'll see these MAs rise and you'll start to touch these MAs one by one. Okay, whether this is the end point for investors is questionable, and it wouldn't surprise me entirely if you end up going slightly higher than this previous high. Now, the reason why, obviously you don't want to buy this, it's all the way off from here. It's gone up for 10 years plus overall, really more in a stable stance since 16, or you could say 2020. You can see you had your fall up here, all right? So that's why I'd be careful. If you short now, I wouldn't really, I would just hold off for another short there. And what would bring this up there would be the Bank of Japan still not saying whether it's going to be April or May or wherever, because that gives investors a bit more time to hold the currency that is against the one, so euro at this point. But when you do get the confirmation and the rhetoric, like I said, you'll break through the support and you'll come back to NAs, okay? Because moving averages are tracking your average price over time, which is your key market measurement for market value, of which you don't have to the long side yet. It's more to the short side. Drop your sizes, space your shorts out, no longs until much lower. Thanks for watching. Remember, you can learn to day trade like I do for income live with me on charts at noon. Get on board the link below. See you soon.